You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to the Options Playbook, the program where we break down cutting-edge option strategies and explain how you can incorporate them into your own portfolio. Whether you're looking to grow your capital with some offensive maneuvers or protect your investments with defensive plays, you can find them all in the Options Playbook. The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities LLC, member FINRA and SIPC. Now, let's open the playbook and get started.
All right, everybody, that music means it is time once again for Options Playbook Radio, the program here on the old network where we break down the sometimes scary, sometimes just impenetrable, sometimes just opaque world of options for you to use in your own portfolios. Maybe you want to get on, play a little offense. You want to score some points, get some revenue, some capital appreciation. We can tell you how to do that, of course. Maybe you're a little scared, a little nervous. Maybe you want to play a little defense. We can help you do that too. Either way, we break it all down for you here on the old Options Playbook Radio program. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. New programs hitting the network as we speak. Stay tuned for those. But if you're saying to yourself, this is not my usual host on this program. Where is the dynamic usual options guy who sits in this chair? Well, allow me to introduce him. Mr. Brian Overby, easy for me to say. Mr. Brian Overby, he is the senior options analyst, indeed the options guy over there at Ally Invest. Brian, welcome back to your own show.
Well, Mark, thanks. I really appreciate that wonderful introduction. And I love it when we get a chance to get together because the email inbox and all the other different forms in this day and age are starting to fill up. And it's time to huddle up and answer some of the listener questions.
It's time to huddle up and answer questions about your favorite options plays. Submit your questions via questions@theoptionsinsider.com, twitter.com/options, facebook.com/theoptionsinsider, or via the Trader Network at tradeking.com.
All right, everybody, welcome to the Huddle, the portion of the show where Brian and I huddle up and answer your pressing options questions. Brian, are you ready to go, sir?
Yes, bring it on.
And I got to warn you, it's a bit of a love fest for you here on the shows. Maybe you can't handle it. Maybe you need to turn away a little bit. But there's a lot of Brian Overby love here. And let me just say, I feel kind of left out, but it's okay. I got other shows to get love on. This is your show, so we'll go with that. We got some epic ones here too, Brian. So put on your listening pants as we dive on into our first question. This comes from Harold Dsouza, maybe just Souza. Let's call him Harold D, just for short here. He says, "Hi, Brian. Let me start off by saying I am a big fan of your Options Playbook radio podcast. I think you are an excellent teacher." See what I mean by the love fest? It just goes on from here. He says, he continues to write, "I have been meaning to reach out to you for a long time now. I'm 41, have been very intrigued by the stock market since I was a kid. I also haven't had an innate fear of losing my hard-earned money, which has kept me away from venturing into the market all these years. I finally overcome my fear and have decided to slowly wade towards the deep end. I have been educating myself for about 4 months, getting comfortable with market terminology and its inner workings. I've been reading books on stocks and options trading and listening to podcasts, absorbing as much as I can. I've had a financial advisor who's been handling my portfolio for 6 years. Honestly, I've seen very little gain in my accounts, but after listening to your podcast, I am motivated, and I believe with the right guidance and education, everything is achievable. I've decided to take control of my finances. I'm listening to your podcast starting from day one and listen to them over and over again until I understand the concept. Some of them I'm struggling with, but I am determined to get there. I like the way you break it down into bite-sized, digestible chunks. My money has been sitting in my trading account for about 3 weeks, so he's brand new to the trading account world. Goes on to write, I'm a little anxious. Take the first step, which is picking the right stock. I'm still conservative with my money, hence I am looking primarily at the Dow and S&P 500 stocks. My focus at this point is to pick the right stock that is on its way up and sell covered calls on those stocks, taking advantage of the current market rally while at the same time getting some residual income. Once I'm comfortable, I will looking at handling my finances in its entirety. I need some guidance on how to pick those stocks. I'm reaching out to you with the hope that you can provide some guidance or point me in the right direction to help me get started and achieve my goal. I'm currently on podcast 32. I don't know if you've covered this in your later podcasts. I don't know if my approach is right. I'm just going with my understanding of what I've been reading and observing and listening, much like a well-read frog in a well. Look forward to hearing from you. Thanks, Harold. Well, Harold, great question, epic question. We welcome the epic treatises here on Options Playbook Radio. First off, welcome to the deep end, as you put it, for managing your own finances. I think you're going to find, with a little bit of effort on your end, I think you could do more than a lot of the asset managers out there. We have this problem with our advisors option show as well. The lion's share of the asset managers out there and advisors are really just going to put you in a 60-40 account, long equity, and maybe some fixed income. Maybe if they're really hot and crazy, then they're going to do 60-30-10 with a little bit maybe gold. And that's really about it. So if you can do a little bit of that on your own and take the advantage of being active and using options, which the lion's share of them still do not use, then you're already ahead of the game. And you write in with a question about picking stocks. I think reading I'm going to go out on a limb before Brian has a chance to weigh in, and then I'll let Brian run away with it here. But it sounds like you say you're very conservative and a little nervous. You're looking at the broad indexes for your suggestions. I think maybe you kind of have the answer in your own email there, which is I think you should start broad and conservative, kind of like your outlook. I think S&P 500, SPY, you can't really go wrong with that one. It's a great starting point. If you're more comfortable with the Dow, then you could choose the Dow. But the SPY is where a lot of the listeners of this podcast, where a lot of them live, where a lot of them do their daily trading. And for the use case you're putting out there, which is to have some broad exposure to the broad market, do a little bit of call overriding on top of it, SPY is a perfect use case for that, because at the end of the day, SPY's not going to zero. It could drop quite a bit, but unlike a single stock, it's not going to get wiped off the board. And if it does, we have other issues. I don't worry about your SPY account at that point. There's other things going on. So I think maybe you hit the nail right on the head with your own suggestion. You're smarter than you think, Harold. And I think SPY is the way to go. But Mr. Overby, he's writing to you with all the love. What do you have to say here for our friend here, Mr. Harold? First off, I'm sure you love the love. But secondly, do you agree with my broad index suggestion, or do you want to go in a different route?
Well, yeah, and I want to say thank you, Harold, for such a nice and well-written email. The keeping it simple, especially when you're starting off by looking at some covered call writing, is to try to avoid the actual stocks, because the stocks are the big fluctuations, and the SPY is a big enough underlying that you get some premium, but you don't have all the volatility. So my one suggestion is kind of an oxymoron when you're thinking about, if you're really thinking about going into the covered call writing, is you want something with some predictability and some volatility, and that's usually an oxymoron, but I think it kind of applies to indexes, because you do see some volatility in these indexes, and specifically the ETFs that go around them. And one of the big things is they're also very liquid underlyings. Here at Ally Invest, we have about the top 10 underlyings do almost 60 or 70% of our total volume in options. And that's mainly because of the pure liquidity of these underlyings. So if you want to start somewhere, that's a very solid place to start, is to find some indexes that you like to track, find something that will trade options against them, and sell some calls on those ETFs that are available on those specific indexes. That's a great spot to start. Now, one of the things on Options Playbook Radio is we don't talk about specific stocks. We just look at scenarios where we think these trades might work. And it's more so about the pricing of the options marketplace than it is about the actual forecast of the underlying stock. And it's all right in the title of the show, Options Playbook Radio. We got 40 different plays that are highlighted in the playbook, and we try to find scenarios where that happens. So my biggest hint is that if you're going to be looking at covered call writing, a lot of beginning option traders want to sell premium. So they look for high volatility. And a lot of times that high volatility means there's a impending news event that's going to happen. Specifically, one of the most popular ones would be earnings. And these are probably when you don't want to be doing these type of strategies. And that's one thing about the indexes is the indexes don't have earnings forecasts for the entire index on one specific day where you can get a 10 or 20% move just because of bad earnings. So with that being said, when I'm looking at covered call writing, I'm just going to say find something that is in the middle of the road if you're looking at specific stocks, and you can never go wrong with looking at the indexes to start with.
Great advice. Great question there as well. His name Harold. Well said, sir. Good luck on your journey. Let us know how it goes. We want to hear follow-ups from you guys. See how things are going. More love here. 2-person email. Joe and Linda writing in, Brian, saying they've been knee-deep with you guys for the last 14 months, and I can't thank you enough for the wealth of information you provide. One of my favorite quotes, your generosity is only exceeded by my gratitude. Well, thank you. He goes on to say, I have a long commute to work in the morning. I have managed to listen to all 240 plus episodes of the Options Playbook. Look at that, Brian. He's listened to the entirety of the show. Maybe we need to make the show longer. So his commute sounds like he's a very long commute, Brian. And we're not doing enough here for Joe and Linda. Plus, he also listened to a bunch of our other shows, Boot Camp, OIC stuff, Option Block, haven't missed. Well, we love guys like you and gals, Linda, Joe and Linda. So we appreciate you. You have a question here about Dan from Option Boot Camp, Option Boot Camp, about his book. If there's an audio version, I'll have to ask him. Next time we do an Options Boot Camp, I will ask him that question for you, Joe, and or Linda. So stay tuned for that one, and I'll keep that one in mind for you there. You also looks like you have some stuff with Bollinger Bands. What's Brian? We must have put out the ping for stock oriented questions. We're getting a lot of them today with the Bollinger Bands stuff. This is not really a technical analysis kind of show, so maybe I'll punt that one for one of our other shows as well. But he's very excited. He wants to thank us for your help. Well, thank you for your question here, Joe it was Joe. Joe is at the end, so it was Joe writing in. Just 2-person account, but it was Joe. He's looking forward to be successful enough to be able to travel to thank us in person. Well, we hope to see you here in Chicago one of these days, or maybe down in the Carolinas where Brian and the Ally Options team are based. But thanks for the love. Thanks for the feedback there, Joe. And we'll throw Linda in there too. Joe and or Linda. All right, let's see here. Dale Bros wants to know, hello. Hey to yourself, Dale. Hey, I recently funded my Ally Invest account, and I intend to begin options trading. Any overviews or guides using the Ally dashboard? Well, this is interesting stuff. Brian, I think this is actually perfect timing, because I think you were telling me before the show that you're working on a bunch of this kind of stuff right now. So what do you have in store for Dale and maybe anyone else who's been converted by your show and wants to kick the tires over there on the Ally website?
Yeah, well, Dale, thank you for opening up the account. That's a nice benefit of Options Playbook Radio. And I want to let you know that, we are doing some help videos. Actually, quite a few just have came out over the last couple of weeks. They are voiced by me, just covering things like the options chain, the P&L calculator. And you can usually find them right next to the tool. That's usually where they are highlighted inside the Ally Invest platform. But Dale, if you want to, why don't you send me an email? I will send you a copy of the Ally Invest version of the Options Playbook if you send me an email. And I can send you direct links to these help videos, no problem. And on top of it, eventually here we're probably going to have a WebEx webinar that will cover the entire use of the platform. We usually do them about once a quarter or so. So coming up, we should have one soon that you'll be able to sign up for, and I'll even send you a link to it. So please do send me that information, Dale. And once again, thank you for opening the account.
There you go. So all of you over there who have been lured over by Brian's words, you want to check it out for yourself and see how to do it with some fun videos. Brian and the team over there at Ally have you covered. And hit him up directly, or maybe we'll try to forward your contact info to him so he could provide you links to all of those videos and a lot more. Let's see. Jared's up next. Jared Smith. He says, I have a question for the podcast. Well, you wrote into the right place. He says, what is meant by the quotes, the tent? For example, stop the trade when it exits, quote, the tent. Let's use an at the money butterfly. Is it the ending, quote, tent, when at the end of the trade it would be max loss, or the end of the trade that would still be a profit, or something else? For example, if I had a 100, 150, 200 at the money butterfly on for $25, would I exit it if it hit 100 or 200 or 125 or 175 or something else? Thanks. We had similar questions come in. I've been putting to some of our other co-hosts here. I thought I'd give you a chance to weigh in on it as well, because this is not terminology I had ever really encountered before. If I had to guess, I'm going to guess this is some educator out there who probably created his own bespoke bit of options terminology to teach to some of his mentees, his educator clients, and that's probably what this guy is referring to. And if I had to guess, Brian, again, I don't know this terminology, but if I had to guess, it is going back to refer to that P&L graph that we see and we malign all the time when we're talking about options education. I mean, how many times have we said, so much of options education is just around P&L graphs and that's it, and there's a lot more to it than that. But still, if I had to guess, that's probably what this guy means. Brian, first off, maybe you've heard this term, I don't know. And then B, if not, what do you think he's referring to here, Jared?
Oh, I definitely think it has to be the tent of the profit and loss calculator the tent as far as the profit and loss graph would look like. But I almost think it's more of a teepee. It's just goes straight up. Tent's a little bit more domed to me in that instance. So
yeah, I don't think of a tent and a butterfly in the same sentence. Yeah, not a tent shape.
I think that I would call it a teepee, if anything. But if it stays in that range, a lot of people will look at it and say, okay, as long as I'm within the strikes that are my long legs of a butterfly. So in this instance, from what he had in his example, we're talking about the 100 and 200 strikes. As long as I'm within that range, I'm pretty safe on a butterfly. Now, I can still lose money at the extremes, right at the strike, right close to expiration. But if I'm within those strikes at any point in time, I still got a good chance of being profitable on that butterfly. So I guess by guessing, by not knowing the exact terminology, my guess would be the 100 and 200 strike, basically your long legs of the butterfly. Now, this is an extreme example. You're talking about a 50-point wide butterfly on a $200 on a $100 stock or $150 stock, somewhere in that range. That's a real wide butterfly. You got a big TP, to use my word, in this instance, but with that said, I think you're saying between the 100 and the 200 level, if it goes outside of those wings of those long legs, you want to think about getting out of the trade.
I'm going to concur with you. I like the TP version as well, because when I first heard this, I was like, tent? Yeah. Doesn't look like any tent I've ever seen, but yeah, TP, that could maybe work a little better. All right, let's see here. Thomas Weber wants to know, if I am short a deep in the money call in SPY. He puts in parentheses, delta near 1. We got where you're coming from, Thomas, but thanks for the additional info. He goes on to write, what are the odds I will be assigned the Thursday night before Friday expiration? This is an interesting one. This is where it gets that last little bit is the interesting wrinkle to your question, because otherwise the answer is pretty much 100%. If you got a delta in the money of 100 or 1 in your example, it's going to be auto-exercised, and you're going to be assigned on that coming through the OCC guidelines. The new OCC, well, new for the last 5 or so years, has been if it's a penny in the money, the calls and all options are getting exercised automatically. So if it's even a penny in the money, if you're a delta of 1 or 100, you're going to be a penny in the money. Then it's going to be automatically exercised, aka assigned against you. But the interesting wrinkle is the night before, Thursday night, the night before expiration for SPY. And when you think about that, the only reason that you could see to really anyone would want to exercise a call on Thursday night or any other night other than on expiration itself is due to the dividend. Remember, we said this before. In fact, our friend who wrote in earlier, what was it, Harold? We talked about SPY, something Harold should pay attention to as well, because a lot of people forget about this fact. But SPY itself has a dividend. And that usually is paid towards the tail end of the quarter there. Usually, it's not always, but it usually is around expiration for the options. Usually it's the third week of the month, somewhere in that time frame. So it's going to coincide somewhere close to options expiration. We've seen some people all the time forget about this. They forget about the fact they're just blithely writing calls and SPY, forgetting about the fact that there is a dividend. And remember, if there's a dividend in any underlying, that's the only real time that you have any sort of incentive to actually exercise an American-style call early. In this case, we're talking about American-style calls. So that would be the time. So if the dividend's coming up right around that time there, what was the name? Thomas. Then, and again, remember, you can do the basic math too. It's a very simple math. Look at the put on your call strike, whatever that strike may be. See how much that put is worth. Then look how much the dividend is. And then you compare and contrast. It's a very basic math. And then you could see right away, if the put's worth more, then you know it's going to happen. And if the dividend is worth more, then you know that perhaps someone's going to become sniffing around for some calls. But, interesting stuff, Brian. That's the only scenario I could think of, really, where anyone would want SPY the night before expiration. Are you on board with that? Can you think of some other random scenarios where someone would want it specifically on Thursday night?
No, that's the only one that is viable as far as anybody can exercise an option contract at any time for any reason if they are along that option contract. But when I used to work with market makers at Knight Financial, the only time where we came up that it was a feasible time to do it is when that underlying is paying a dividend. And once again, that dividend has to be greater than the time premium in the option contract. And that's the little trick you were talking about by looking at the put, because that's giving you an idea on the time premium. And one of the big things here, when he said near 1 delta, it's also important to note that if you have a delta of 1, that means you have no time premium. The time premium in the option contract has to go away for your delta to be 1, or sometimes referred to as 100 for that option contract specifically. So it sounds like Thomas actually got assigned here, because he's asking the question the way that he is, wondering what happened. And the SPY is probably the biggest underlying that we get this question on. And it's because the markets are so tight and they have a tendency to pay these dividends when there is very little time premium left in the option contracts, i.e. the Thursday before the Friday expiration. So if it happens, don't panic. I would just say call. First off, don't just sit there and try to belabor what happened. If you call our trade desk, we've got a lot of option specialists on our desk, they'll know right away what happened, because there's probably another 100 calls they've received that day from people that did the exact same thing as you, forgot about the dividend getting paid in that ex-dividend date. So, yep, that is the only rational explanation that one can come up with as a professional option trader as to why you would be assigned. And on the put side, remember, it's a deterrent. So if you are short a put option contract, the actual payment of the dividend is a deterrent. So don't be trying to mix metaphors here between puts and calls. It's really only on the call side.
Yes. Early exercise for the calls when there's a dividend. So basically, Thomas, Harold, whoever else is going to be trading SPY out there, just do that basic bit of math. First off, pay attention to when the SPY dividend, because you'd be amazed how many of these emails we get. In fact, I'm going out on a limb and say, Brian, that's exactly what happened with Thomas here, is that he did get hit on that, and that's why he wrote to us, because I always know when the SPY dividend is popping up, because we get these emails, a whole bunch of them. I'm sure you guys get the calls and the emails and the inquiries over there at Ally as well, because it's that time of the year when SPY goes dividend and everyone forgets. So first off, pay attention. Remember when the dividends is usually, it's not official, it's not an official date for it, but you know the time frame when it's going to be coming around. So pay attention to that if you're overriding calls in SPY. Then again, that very basic math we were talking about. Remember, if you're exercising a call early, you're effectively selling out the put for nothing, right? So you're losing all that time value. So no one's going to do that if the put is worth a ton more than the dividend. It's a money losing trade. There's no reason to do it. So if the dividend's worth more then you know people are going to be coming for those puts and vice versa. And Brian made a good point about it being close to expiration, which always kind of muddies the waters a little bit too, because all that time premium has gone away. So good questions, everybody. We had quite the journey through the world of options here today. Early exercise, we had tents and butterflies, we had some video help, we had a lot of love for you. Now you have the unenviable task, sir, of having to pick who wins the book. Is it Harold? Is it Joe and Linda? Is it Dale? Is it Jared or Thomas, sir?
Well, we have to go with Harold because he is saying that he's been just starting in options. So that was the key there. And obviously a lot of love. So I got to give some love back to Harold. So happy to send that options playbook out to Harold, and best of luck on writing your covered calls.
There you go, Harold. A little bit of love goes a long way here on the old options playbook. We'll send you a nice hard copy of the options playbook so you can follow along at your leisure. Hopefully those baby steps you're taking into the deep end there, hopefully it works out for you. Let us know how it goes, and hopefully having a nice hard copy maybe on your nightstand by your bed at night will soothe that anxiety as you're wading into the deep end. Well done, sir. All right, Brian, if we have other listeners out there who want to be just like Harold, they want to write to you and maybe get a direct reply and maybe even win themselves a physical copy of the playbook, where should they go? What should they do, sir?
All right. Well, that's going to be it for this episode. And I just want to let you know that if you do want to send me an email, please email me directly at theoptionsguy@invest.ally.com. That's theoptionsguy@invest.ally.com. Thanks for listening, everyone. And thank you, Mark, for being such a gracious host today. We'll see you same time, same place next week.
The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities, LLC, member FINRA and SIPC.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.